Okay. I hope you can see my screen now.
Yes,
Yes,
sir.
All right. So we are going to look at cash management and cash forecasting, though cash budgets is what your syllabus requires. I will go a little beyond cash budgeting, right? So when it comes to cash management, it's a very crucial part of your business because cash is the lifeblood of business and profit is the heart, right? Without the blood, the heart cannot function. So cash management is crucial for the financial health and stability of a business. And efficient cash management ensures that a company can meet its financial obligations, take advantage of business opportunities, and maintain sufficient to operate smoothly, right? Now, why do we hold cash? Okay, it can be broken down into several reasons, but there are three main reasons why we hold cash, right? What are the three main reasons why we hold cash? Who knows it? Or the three main motives of holding cash?
for
Hello, Bill.
transaction
Transaction
motive,
motive. For
recurring motive, and speculative motive.
Transactionary. Also, we have speculative motive or investment motive, right? And we have what? Precautionary motive, right? Okay, so these are the three main reasons. You hold cash for your daily transactions. You can also hold cash because you want to do some particular investment, right? You know that some investment is going to go up, you can go and invest. You can also hold cash for emergencies or what we call precautionary motives, right? So these are the main reasons why we hold cash. Other reasons include, which may fall into other of these ones, right? Working capital management, cash flow management, to seize business opportunities, to pay off your debt, to hold cash during seasonal fluctuations, and so on and so forth. So these are the reasons why we hold cash, and it can be deemed as what importance of good cash management, right? They are the same thing. Now, one thing I want to talk about is the aspect of cash management. Okay, so sometimes management accounting may require you to prepare a cash budget, but we'll ask you what you should do. Maybe you had a surplus balance. Should you invest it? Maybe you have a deficit balance. What should you do, right? So you must understand that when you are forecasting cash flows, right, it's mostly about your operational cash flows, what you need for the period, right? So at the end of the day, if you calculate your cash budget or you formulate your cash budget, maybe you want to go and raise finance at the bank, right? You may have cash flow deficit, meaning you must find a way to balance the deficit, or you may have a surplus so that you find a way to what? Invest in short-term investments, right? Like treasury bill and other things. So that thing is very important. Now, when you are preparing cash budget, right? Cash budgets usually have a format, okay? So you get your what? Your receipt and then your payment. So you take your receipt, take your payment. When you subtract your payment from your receipt, you get your net cash flows. After getting the net cash flows, you add it to the opening cash balance, right? Then you come and get your closing cash balance. That's the approach of a cash budget. But to get the factors within the cash budget is the problem for students, right? So this is where the techniques you learned in functional budgets and other things will play a key role. Okay, one thing you must understand is that when it comes to cash budgets, you have to be very skeptical because every question is different in its own way. Now, one thing I want you to know is that when it comes to cash budget, these are the things that are very important, especially the receipts. How to get the receipts mostly is a problem, especially not all receipts, but then receipt from customers, right? That is receipt from your sales. Okay, your receipt from sales. When you sell and you promise customers that they should pay in the next 3 months or 4 months, there's a payment schedule. That is where the difficulty is. And apart from that, things around purchases, right? Labor, okay, the ones that we normally use the functional budgets to prepare, to get the cash aspects, sometimes there are problems. So I'll give you all the tricks and all the techniques that you can use to determine all these assets from a cash budget scenario, right? Is it not fun? We are going to learn all the techniques, all the different ways they can examine you, and you should be able to get the missing figures. I told you everything about budgeting is missing figures at your level. Do you guys remember? So fasten your seatbelts. Ladies and gentlemen, this is your captain speaking. Are you poised for the journey? Let's proceed. I didn't
Sir.
eat already.
Yes, let's proceed.
All right. So cash budget actually, usually in class, I realized that we learn the cash budget overall. But then first, let's learn all the mini components, right? Of all the possible things that you can get for the cash budget. Then, after learning all the different kind of workings we can have in the cash budget, then I believe that we can be fully fit to deal with what? Questions, right? So I'll give you all the technical scenarios. So look at this. First is the receivables or the amounts that you're going to receive from your customers, right? And one thing that you must understand here is that sometimes it is difficult to determine the payment from payments to suppliers and receipt from customers. For instance, you can see an example here. Can we all see? Can we all see the example? Can we all see the example? This one. Let me highlight it for you.
Okay.
So he said what? Prof's company has budgeted that sales will be 300,100 in January 20x2 and 500 in February, 150,000 in March, and 320,500 in April, right? So they've given us the sales, and you know sales is what? They've given us January, February, March, and what? And April. Give me the figures. Yes, give me the figures. Oh, please, quickly.
January
300,100.
January is 300,100. February,
February is 501, 500.
101, 500. March,
Then 150,000 in March.
1,000. Then we have what?
320, 500 April.
500. Okay. Now, the next thing is they are saying that half of the sales will be credit sales, right? So this is total sales for the period, right? And the question is telling us that what? Half of the sales will be credit sales. Okay. So that means that your credit sales is going to be what? Half of the sales. So 50% of these figures are going to be credit sales, right? That means that cash sales, immediately, you know that you can take 50% of this as cash sales and put it there as receipt from customers. Do you get a trick? Does it make
Yes,
sense?
sir.
So me, when I
Yes.
prepare cash budgets, I don't finish all my sales workings. Immediately they tell me, let's say 10% is received in the month of sale. I assume it is cash sales because if I sell in September and I receive in September, is it not cash sales? So immediately I put it under cash before I go and look for the other one. So your job is to find easy marks. You getting easy marks makes the work simpler for you. Makes sense. All right. So let's get our credit sales. That's 50% of each of this. Let's spread it out. So 50% of this will be what?
150,000, 50.
150,050. Okay. Then for February,
250,000, 750.
250,750. Today,
75,000.
I've been writing for a very long time, so my handwriting may be clumsy. My hand is aching.
75,000.
75,000. Yes. Then April,
160,000, 250.
162. Okay. So these are the various credit sales, but the customers won't pay outright, right? So what did they say? How are we going to do the collections? Yes, who is reading for us?
80% of receivables are expected to pay in the month after sale.
Okay.
Should I continue or we deal with that first?
No, you continue.
Okay, 15% in the second month after sale, while the remaining 5% are expected to be bad debts. Receivables who pay in the month after the sale can claim a 4% early settlement discount. Requirement: what level of sales receipt should be shown in the cash budget for March 20x to the nearest dollar?
Do you get the idea? So let's look at our collections. How does this thing work? So mostly, cash budget, there's no one way of doing it, but I like to go simple, right? So for instance, I will say, okay, I want January collections, right? Or January. And I know that January collections, how will we say it? January will go on. We take what? We take 80%, not so. Then the next
80%.
is what?
Yeah.
15%, not so. Then the next what? The next 5% are expected to be bad debts. You remember? But so far as
Yes, sir.
it means we
Yes.
have to take it. So that 5% will likely be ignored, right? But they are saying that anybody who pays in the month after the sale will be given a discount of what? 4%. Now, this sounds interesting, all right? So if you like, you can do only January, okay? You can do only January and capture it this way, okay? January, 80% will come here, 15% will come here, then this one will come here, right? Less 4%. Or you can do 80%, then only the January, February, March. It depends on how you want to do the working. This one is a smart student, may go like this. Another student may say, okay, so this is how I want to go. Let's find all the what? All the 80%. You see the trick? You see the trick? So
Yes, sir.
the collections are 80, 15, 5, right? And this 15 is minus what? 4% discount. Makes sense?
Yes, sir.
Okay. So we are saying that, okay, if I take the January 80%, it will be what?
120,040.
So 120,000 what?
40 and 40.
This one will be 120,000 and what? 40, right?
40.
To be paid in the
Yes,
month
sir.
after the sale, right? You get it. 120,000 and what? 40. But to be paid the month after the sale. So
Yes, sir.
Yes.
I can deduct the discounts. Okay, which will be what? This old school less approach. They will now come and take 4% of this, right? Of this figure out as the discount. Then they get the net amount. But it will be too cumbersome for you. So because any amount paid the month after the sale gets a 4% discount, we know that always a price is 100%, right? So if you take discount of 4%, it means that how much of the price will you end up paying?
96%.
96%, right? Straightforward. So it means that January sales, we take 80% of the amount, then we also multiply by 0.96, meaning we've taken advantage of that one, that 4% discount. Makes sense?
Yes, sir.
So straightforward, every figure you get for the 80% settlement, you must take what? You must take what? 0.9.
96%.
So let's multiply. Now, this will be 150, 050 times 80% times 0.96. We put it here. Are you learning the tricks? Don't just focus on the question. You learn the tricks. So. Yes, let's continue. I hope you are getting it.
115, 238,
So
40
this one will
pesos.
be what? Don't add the decimal round up. You said it will be 115,
238.
238. Okay. Then that means this one will come here, right? Okay, what about this one?
192,576.
192,576. Did you take advantage of the discount?
Yes, sir.
All right. Then March will go into April, right?
$57,600.
57.
600.
Okay. So that is it. Then that was the 80%, right? So the 80% we've dealt with January,
No,
February, March.
So I took advantage of the 4%.
Yes, that's how it's supposed to be.
Okay.
So we have done January, February, March, right? And April. April will fall in May. We're only doing up to April. That one will not count. Are we okay? So January, we have done January, February, March, and April, right? Yeah. So we go to the 15% part, right? So the 15% part, we know that the 15%, we are taking that one is paid the month after the sale, right? So January 15% will be what? January 15% will be paid in February. No, it will be paid in March, right? They said 2 months after the sale. Not so. So find 15% of this figure.
22,508.
22,508. Then February's own will be paid when? 2 months after February. That's April, right?
April.
So February's own will be paid when?
April.
April. So give me the figure. Is the figure in here? That's 15% of
37,
37.
37,
613.
613. Okay, now we know March will be in May and April will be in June, right? But we are only ending in April. So I think the rest are bad debts. Bad debts are not cash, right? We're only looking for cash figures. So this becomes what? The cash receipts, right? So the cash receipts that we will have, I think we have the cash side of things and we have the credit side collections, right? So let's add up. So January is typically nil, nothing fell in January. Okay, so we have 115,238 falling here. All right. Then we have what? 75,000. 192,576 plus 22,508. That's 215,084. Then we have 57,600 plus 37,613. That's
95,213.
213, right? Okay. So when we get to our cash budget, right? So Prof school, right? Prof school. Say cash budget for the 4 months ending, right? 4 months ending. So we have January, we have February, we have March, we have April, and we have total, right? So I just say we have this one. Right? Okay. So this is what I'll do. Receipt from customers, right? So first of all, I had cash sales. Do you guys remember? So cash sales was half, was 50% of the original sale. Do you remember? So that one, you just pick it up. Become your cash sales. Cash sales was half of the sales. Do you guys remember? Was this the sale?
The same as the credit sales.
Yes. So we take 150,050. So 150,050. Then the next one was what? 257.50, right? 257.50. Then we have 75,000, not so.
Yes.
5,000. Then April was what?
160, 250.
160, 250. 160, 250. Okay, so give me the total. That is 150,050 plus 257.50. plus 75,000 plus 160,250. That is 63650.
36050.
Okay, then we come to what? The cash collections, right? The credit receipts. The receipts from credit sales. Okay, that one, January was nil. Then we collected 115,238, right? Then we collected 215,084. Then we collected 95,213, giving us a total of 115,238 plus 215,084 plus 95,213. That's 425,535. Right? I hope this makes sense. So usually when it comes to receipts, that is where your problems will be. But I hope now it's not a problem. At least you've seen the basic aspects of this. Any questions so far? Did you get a style? It's strictly up to you.
Sir, there's question.
Ask.
Sir, why is that we apply only the 4% on the 80%, the discount? Why that is not affecting all the
No.
like the 15%? Why that the discount is not affecting that?
That's because the question said that those who are paying in the second month are going to get the discount on the sale in that month. Anyway, the question, this is an illustration question, right? Some questions can tell you that they get a full discount on the amount, meaning that in that case, that 150,050, you first apply 4% before you come and do the 80 and the 15. Do you get it?
Yes, sir.
So it depends on the nature of the question. In actual sense, what happens is that if you pay early, you get 4% on the full price. Okay, meaning that the full sale that is credit, you get 4% on this 150,050. Do you get it? But this question is an illustration,
Yes, sir.
which is the payment that you pay, you get a 4% of that payment. So it depends on how the question has been framed. Makes sense. All right.
Yes, sir.
Okay. But then under normal circumstances, this is the full amount that you get a discount when you pay early. It's a cash discount, a discount allowed. So if you are preparing your P&L, that will go as an expense. Makes sense.
Hello, sir.
Yes, boss.
Please, forgive me if I'm wrong. What happens to the 15%?
The 15%. It's part of this.
Yes.
It's part of your receipts. See, this is it. It's receipts. It's just the way your debtors are collected.
Okay, because I saw 20%, 80%, and then 15% and 5%.
The 5%
if
is bad debt. And no, bad debt is not cash. We're only dealing with cash.
Oh, okay, that's fine. Okay, so the 5% is bad. Okay, thank you very much.
So what are other ways to calculate the sales? We can use the control accounts to do this, right? So control accounts. Now, control accounts can be used to find any kind of missing figure. You are accounting students, and in management accounting, sometimes you can use control accounts. Control accounts basically work like this. You take your opening balance, okay? So assuming it's receivables, then you know receivables works with what? It works with sales, not so? True or false? So if I want to get my sales receipts or cash from my customers, I may take my opening receivables, right, at the start of the year.
Hello, sir.
Yes, boss.
Sir, please, just a minute. Can you just go up on the
that illustration you want to write? No, don't write. Don't worry. There are more questions we'll solve. Don't worry about that. So it was just an
just the solution.
Is it?
Just the solution, the second part of the solution. We just want to screenshot.
Hey, she just said everything, even if I copy you right. Okay. I'll put it down. This one. Is it here?
Yes, sir. Kindly go up. Yes. Yes, sir, it's fine. Thank you.
Okay. So when I take my opening receivables,
Thank you, sir.
right? If there are any credit sales, okay, I will add credit sales, or I'll add my sales, right? And that gives me the total amount receivable. Do you get it? That should be the total amount receivable from my customers. Do you get it? Then you compare it to what? The closing balance, right? That's the closing receivables. All right. And then the difference gives you what? The cash receipts from customers, right? This one, you've been doing it in cash flow statements. Have you noticed? So this becomes the balancing figure. This straight is the worst case scenario, okay? Where students, you are looking for the cash, you are not finding it. You are looking, you are not finding it. Then this is the approach that sometimes they hide in the question, but you wouldn't know, okay? So this approach too can be adopted. So I'm just giving you all the necessary styles that they can do this. If you want to find cash paid to suppliers, right? Payments for your purchases, that one you take the payables account, right? In the same way, you can do the same thing. Take the opening balance, right? For your payables, not so. Add your credit purchases, right? You know that when you purchase, you have trade payable. So you add, and that gives you the total amount due, right? That gives you the total amount due. So you compare this to a closing balance, and then you end up with what? And then you end up with what? The payment
Cash payment.
to suppliers. Make sense? You get it? The same way, if I want to pay expenses, okay, I can take the expenses payable account. So let's say we have expenses payable. Okay, this is pure accounting, right? So I can take expenses payable account. The same way, I can take the balance brought forward. So this is for any expense or income account, just like in cash flow statement, you take the balance brought forward, add the P&L figure for that expense or income, right? Add the two, then compare it to the closing balance, right? And the difference gives you the cash what? Or payment, right? For that income or expense. Makes sense. This is a simple rule I use for my cash flow statement, and I use for anything, assuming I don't get the orthodox way where I have to find 60% here, 10% there, and all that. Makes sense. Hello.
Sir, please, can we have the question on the WhatsApp page?
Can you have the question on the WhatsApp page? Which question?
Yes, we can track it.
Yeah, just take a shot and put it there. Because me copying is PDF, it will misarrange. So someone should just, any question we solve, I'll give you the chance. Just take the shot and just put it on the page. So someone should take the screenshot of this question. Have you written the format now? Have you written the format?
Yes, sir.
All right. So can we go? So we are going to take a small illustration, right? So this is Jocal Limited. Some people's background is quite noisy. So Jocal Limited, right, has been presented or has the following information. So the company has the following information. Write along, go. Don't say, sir, give me time to copy. As I'm writing, you are writing. So it has income statement, right? So it has income statement for the month of okay, let's say for the month of January, right? I'm just doing 1 month just to show you. You can do for other months. So we have sales revenue, okay? So see, this guy has sales revenue here, right? Being 500,000, okay? Then we have cost of sales. No, let me add a little bit of spice to this question. What do you guys say? No, don't worry. I wanted to add some spice to this question, some small spice. Okay, it can be done. So I've given you sales revenue. Then additional information. The company keeps a margin of 25% on all sales and keeps 35% of its opening inventory as closing inventory at the end of each year. The company incurs operating expenses equivalent to 12% of its sales. Let me make it for the month. We are working in month, right? 12% of its sales monthly. No, 12% is let's make it 42% of its sales. Okay. Insurance of 50,000 will be received from SIC. Okay. So that's the second note that you have. Finance costs of 30,000 was recorded in the P&L. Taxes of 60,000 was recorded in the P&L. Okay. Closing stock in December amounted to 34,800. Are you writing? Write it down. My questions are stressful. So write it down. Are you there?
Yes, sir.
Okay, we are writing.
We have balance sheets. Extra. December 20x1. January 20x2. So you have receivables, 40,000 December, 70,000 in January. Then you have inventory. Inventory, nothing is there. Yet to be found. Okay. So we have payables. 24,000 at start, 60,000 at end. That's loan interest accrued. Loan interest accrued, 14,000, 20,000. Tax payable. 10,000, 2,000, right? We have expenses accrued. 4,000, 6,000. So this is the information we have. Very nice. The requirements to prepare the cash budgets for the month of January 20x2, if opening cash and cash equivalent was 75,000. Question may be more, and they're very simple. The question loaded or it's okay?
I think it's okay.
It's loaded.
You want me to add more stuff?
Gradual.
Where are you now? Are you done? Which note? So that I will go there, you copy and
The last one, the cash and cash equivalent amount.
okay, 75. Yeah. Okay. So are we all done now? Are we all
Yes, sir.
all right? We just want to select and then okay. So what are the information given in the question? First of all, we know that we need receipt from customers, right? Let's do our workings. We need receipt from customers. True or false? True or false?
It's true.
And here we are using
True,
control
sir.
account. We can use control account, right? Meaning we can take the debtors account. Debtors are our customers. True or false? So let's go and take our debtors account. We have sales
True.
already. This is our sales, so we can easily get what? Our debtors account. So let's go to the balance sheet extracts. Yes, we had debtors, right? Receivables. So in that case, I can work it out, right? So what's the balance brought forward for receivables? Opening balance. Receivables were owing me what? 40,000 from December.
50,000.
From December, were they not owing me 40,000? Yes, they were.
Yes, sir.
And I
Yeah,
sold, then I sold more to them, right? So they should be owing me more. How much more did I sell to them? I sold additional 500,000 to them.
Five.
Do you get it?
No, that was 50,000.
No, I sold additional 500,000 to them. Remember, I gave you a rule. Opening balance, add P&L figure compared to closing balance. What's the P&L figure for receivables? It is sales.
500.
Do you get it? So Nipane they will cap 40. Then you sold additional sales to them, right? How much did you sell? You sold additional
500,000.
500,000. Meaning they should be owing you at the end of the year. How much?
70.
So they should have been how much? That means this guy should have been owing you what?
140.
540,000. But at the end of the day, your customer's value has decreased to what?
70.
70.
You see how it works. So see you. Somebody who should have owed you 540, their balance has reduced to what? Their balance has
70.
reduced to 70.
That was reduced to 70 years.
You see how it is. So you are owing me 540, but when I went to check, it is 70. Have you paid me something?
Yes, sir.
Yes. How much did they pay?
70. 470.
That means that is the cash receipt from customers. You see how this works? Very easy, right? But if you don't know, you don't know. So what's the cash receipt from customers? The balancing figure. You said it's what? 470,000. You see? So
Yes,
this
sir.
is the receipt from customers. So we can do the same for what? Our purchases, right? Purchases can make us a payment to suppliers for raw materials. So I need payments for raw materials, right? To my suppliers. Okay. But that means I must get the payables balance. Not so?
Mhm.
I must get the payables balance and add and add purchases. But do we have purchases in the question? We don't. So how then do we get purchases? From cost of sales. So first of all, I must find Baba purchases. How do I find purchases? Now they are telling me that sales revenue, right? I make a margin of what? 25% of my sales revenue. That means if I take sales, which is equivalent to 100%, right? The sales was how much? Was it not 500,000?
500, yes.
They said you make a
500,000.
profit. You make a gross profit of what? What percent?
25%.
You make a gross profit of 25% on your sales. So gross profit of 25% would have been what?
625 minus 500.
No,
125.
25% times 500,000. That would be what?
125.
It will be 125.
Yes.
Okay. So we are saying that, okay, if gross profit is 25, that means cost of sales would have been what? Would have been 75%. So straightforward, you could have just found 75% of the sales to get your your cost of sales. That would have been what?
375.
375,000. Okay, that is cool. But we still haven't got purchases yet. We know that cost of sales equals to what? Opening what? Opening stock plus what?
Purchases.
Plus purchases
Purchases.
minus what?
Plus in stock.
Closing stock.
Okay. But it is this Baba that we are finding here, right? You get the idea? The question is very easy, right? But it has some tricks. That's why I'm teaching you. So look. Now, do we have opening stock? You guys wrote the question. Tell me if there was opening stock.
No, no opening stock.
Ah.
We
Are you sure there was no opening stock? We
yeah,
are
35%.
But
35%.
There was.
we have
Okay,
closing
There was.
from we have closing stock from December.
Uh-huh.
Stock from December
Of
becomes what?
24,000.
No, opening stock, closing stock from December becomes what?
Opening stock
because
for
opening
January.
stock,
Opening stock for
yes.
January.
So we know that this is what? Opening stock for January, which is 34,800, right? So I add this to my purchases, which I don't know. But they say every month we keep what? We keep 35% of our opening inventory as our closing stock. Through what?
True.
So what becomes our closing stock?
12,180.
So we equate this to the cost of sales of 375, right? Because we've already found the cost of sales. Not so.
Yes, sir.
So in that case, what becomes our purchases? We make purchases the subject. So our purchases becomes what? That is our
375,000.
375,000 plus 12,180 minus what?
34,800.
So this thing you did it just last week, right? You realize that we just took the closing stock minus the opening stock, not so, plus the cost of sales, the purchases budget. Do you notice? So always when you're finding missing figures, you are just working back your functional budget. So how much is the purchases?
328.
Okay.
20 cities.
328,
20 cities.
Okay. So another student could have gone the statement where it doesn't really matter. So far as you know what is added, what is subtracted. Did you make sense of this working? Did it make sense? I know a lot.
Lisa, how did you get that 12,180? The closing stock.
The company, please read for me. The first note. Please read for me. The person who asked the question. The company what?
Keeps a gross profit of 25% on all sales and
And
keep
keeps-
35 of its opening inventory as closing stock. Oh, okay.
So what?
Okay, so 35%.
34,800 from January, right? From December.
Yes.
Becomes opening. stock.
Okay.
So we take what?
Right.
35% of it to give us our 12,180.
Okay, thank you.
Question maybe one more. It's brain work. All right.
Papa.
We haven't
Yeah.
yet. Yes, sir.
So I think so let's go back to just the 34,800 plus purchases minus closing stock,
Yeah.
right?
Yeah.
Yes. So if you want to group like terms, you are just doing 34,800 minus the 12,180.
Yes. Right.
Yeah, and then you are getting 22,620.
Mhm. Then you add it to the 375 because you are just finding purchases. Usually, if you are not mathematics savvy, you can use the work back approach. So you are going to say this, right? You build the P&L all over again. So you say, okay, this is sales. Sales was 500,000. Actually, after this, we'll prepare master budget with the same question, but don't worry about that. So you are saying that, okay, this is your sales, right? Then here is my cost of sales. I know that my cost of sales is around 75% of the sales, right? Okay, so I know that I'll have opening stock, which was what? 34 what? How much was the opening stock? Please quickly, we have a lot.
34,800.
34,800.
34,800.
Right? Then we add what? Purchases, right? Not so. But purchases, we don't know. It's the balancing figure. Then we less closing stock. So we know closing stock will be what? That is 35% of 34.8. So that gives us what?
12,180.
12,180, right? Okay, 12,180. We know that when we add this up, we come and get the cost of sales. The cost of sales, which we already know that is 75% of the sales, which was what? 375,000. So you can work it back from here and say, okay, this plus box minus 12,180 gives us the 37 375,000, right? So what do we get then? So you can work back. So anytime you are working back, something that was added must be subtracted, and something that was subtracted must be added. Do you get a rule? So that means take 375,000, add back 12,180, and less 34,800. You come and get this figure. What did I say? Anytime you are working back, you what? You add whatever was subtracted, and you less whatever was added. Do you get the whole idea? Do you get the whole idea? Do you get it?
Yes, sir.
Yes, sir.
So I take 375, right? Then 12,180 was taken out, so you add it back. And 34,800 was added, so you subtract it. Then you get the missing figure here. Do it and see what do you get for the purchases as the balancing figure. $375,000 plus 12,180 minus 34,800. Was it 34,800? Then that means this figure you gave me here is wrong. Check it well.
I think so because I'm getting 352, 380.
352, 380. That's what I got. So the first figure, this figure was wrong because when you do it, you should get 352, 380 as the purchases. 352, 380. 352, 380.
Yes, sir. Yes, that was my problem.
That is it. So cost of sales. That means how much is our gross profit? Gross profit, you can either do 25% of the sales or just take your 500,000 and less what? And less what?
375.
75,000. Then you get your gross profit. Then how much is our gross
147, 620.
for gross profit? No. 500,000.
Exactly.
375.
125,000.
Then under that, we have operating expenses, right? Okay. No, we had other income. They said we'll be
So,
receiving insurance.
125,000.
We'll be receiving insurance of 50,000, right? So we must add it to our gross profit. Not so. So you see, you end up building the master budget. So we had insurance claim or insurance income of how much? Of 50,000 coming in, right? Then come to operating expenses. The question tells us operating expenses is what? Equivalent of what percentage of sales?
42%.
42%. So let's take 42% of sales. How much is 42% of the 500,000? Oh, it's too big. It's too big. Let's make it 12% of sales. I don't want the question to be, I don't need a loss. Okay, make it 12% of sales. All right. So 12% of sales becomes operating expenses. That is how much?
60,000.
12%. Okay.
Yes, sir.
Operating expenses become 60,000, which is an expense. Then they said finance cost of 30,000, right? So this one, when we take it out, we end up with what? Our operating profit, right? Operating profit, which is the same as profit before interest and tax. Okay, which is how much? So this one we have done this is what we call the master budget, right? The P&L and the balance sheet. So we have what? Gross profit of 125,000 plus 50,000 insurance minus 60,000, right?
15,000.
Which is 115,000, right? Okay. So we less what? Finance cost or interest expense.
No, sir, just 15,000. No.
What is
Okay. This is income. I get it now.
So finance cost or interest expense, right? So we had interest expense of how much? 30,000 also. Okay, so interest expense 30,000. We take it out. Then we come and get profit before tax, not so. Not so. Profit before tax, that will be how much? 115 minus 30.
85.
80.
85,000. That's my investment behaving like this. $85,000. Okay. Then tax. Tax is what? 60,000 also. So what's our profit after tax?
25,000.
5,000.
So that's the P&L, right? Okay.
So, sir, what happens to the tax in the question? We have the tax payable, the 10,000 and the 2,000.
Don't worry, those ones are for the cash balances.
Oh, okay.
This one is just a P&L. Remember that even the purchases that we got, we were supposed to put it into this right, this format, like the way we got the cash receipt from customers. Do you see?
Okay.
Now, let's forget the P&L, right? I was just showing you how to do that. Now, since we have purchases, the expenses, and every other thing, it means that now, assuming I want to get my what? My cash payments to suppliers, right? Cash payments to suppliers for raw materials, right? What do? I can take the payables balance. Do you get it? Do you remember? I can
Yes,
take
sir.
the payables balance. What's the payables balance? Let's go back to the question.
24,000.
Payables, 24,000 forward for December, right? Then did we sell more to them? Yes. Did we buy more from them? Yes, we bought more, right? Purchases. The purchases was 352, 380. Do you remember?
Yes, sir.
So it means that at the end of the day, what it should have been what? How much should we have owed our suppliers?
376,
We have
380.
owed them 376, 380, right? But at the end of the day, it became what? What's the payables carried forward?
60,000.
So you are owing somebody 376, 380, but he reduced to 60,000. Did you pay him?
Yes, sir.
How much did you pay him? That becomes the balance.
316, 380.
Means you paid him 316, 380, right? The balancing figure. You get it? So that becomes the payment to suppliers. Okay. Same way, you can come here to find the actual tax paid, right? So the same way, we can get our taxes, our actual tax paid. Did we have any tax owing for the previous year? Yes, we did, right? How much was it? We're owing tax of 10,000. No, so how much tax was charged to the P&L? What was the tax charge for the year?
60,000.
The P&L. It was how much? 60,000.
60,000.
Okay, that means at the end of the day, we should have owed GRA how much?
70,000.
We should have owed GRA 70,000, right? Okay. But at the end of the year, how much did we end up owing GRA?
2,000.
2,000.
2,000. That means did
So
we
we
pay
paid
tax?
68.
Yes, that means the tax that we ended up paying was worth what? 68,000. So the one in the P&L is a tax accrued, okay?
Okay.
And this is the actual tax paid. You get it? So
Yes, sir.
let's check. Did we owe any interest? Let's check and see.
Yes, sir.
Loan interest accrued. So loan interest payable, right? So let's check if truly we actually paid some interest for the period. So what happened? Loan interest, we were owing how much?
14,000.
14.
We're owing 14,000 in December, right?
14,000.
And at the end of the day, what happened?
We're owing 20,000.
Okay. Then how much did we deal with the P&L? Loan interest in the P&L?
30,000.
30,000. It means that we should have owed the bank about 44,000, right?
Yes,
By the end of the day, loan interest became what?
20. So we paid for 24.
It means that interest paid was actually what?
24,000.
24,000. So that gives us a balance carried forward. Yeah. Okay. Let's go and check our expenses actually paid. Did we have any expense owing on the balance sheet? Yes, we had expenses
sir.
accrued, right? So expenses accrued. You can use this same account to get the missing expenses actually paid, right? So same way, we were owing how much to our expense creditors? 4,000, right?
4,000.
A year. What was the expense charge in the P&L?
That
60,000.
Operating expenses
60,000.
was 60,000.
60,000.
Operating.
That should have been 64,000, right? At the end of the day, what did our expenses become on the balance sheet?
6,000.
6,000. So something that you are owing 64. You have not owing 6,000. How much was paid off?
58.
Means that 58,000 had paid off, right? As operating expenses. So expenses actually paid, right? Expenses paid. All right. So now that we've seen this one, let's go and find our cash budget, right? So you see how this question is. You see it's a different style. You see this question too is a different style.
Yes.
All right. So cash budget for what? The month of what? The month of January 20XT. Okay, so we have receipts. So what receipts did we have? We have receipts from customers. True or false?
Yeah.
Receipt from customers. And we did it in our working one. Let's go up and let's go and check. In our first working. That was what? 470,000. Not so. Not so.
It is.
Was there any other receipt in the question? Yes, there was.
Insurance.
Insurance receipt. How much?
50,000.
50,000. Okay, so this one gives us our total receipt. Not so. This question, how many of you would have gotten it in exam?
Hey, the video go rough.
520,000, yeah? But you see, it's not difficult when you understand.
But I think when you go the way of the control account, it's very simple.
But most people do not know.
Now we know we can use that approach.
Yeah. So let's see. We have total receipt of 520. Now we go to payment, right? What payments were made? So payment for raw materials, how much was it? Or payments to suppliers for the period? Let's go and check. Payments to suppliers for the period. We paid 316,380, right? 316,380. 316,380. Then what else did we have? What other payment?
We paid interest.
Expenses, right? Payment for expenses. That's labor and overhead. Payment for expenses to when to work it. 58,000, right? From our control account up there, 58,000. Then what else did we work for? Interest and tax, right? That's the only thing we do. Yes, interest and tax. Interest was what? 24.
68.24.
So interest paid 24,000 actually. Then tax paid was how much?
68,000.
Okay. Were these the only payments that were made during the year? Yes, I believe so, right? Okay, so close it off. These are total payments. Let's add up. That gives us a 316,380 plus 58,000 plus 24,000 plus 68,000, right? So that's 466,380. 466,380. We take it out. That gives us our net cash and cash equivalent, or our net cash receipts. Okay, our net cash receipts will give us how much? 520,000. That's 53,620. All right. Then we'll add what? Our opening cash and cash equivalent, right? So what's our opening cash and cash equivalent? The question gave it to you. Prepare the cash budget if the opening cash and cash equivalent was what?
Go down small.
75,000.
Okay, so we add it. Then we come and get the closing cash and cash equivalent. So that is 53,620 plus 75,000. And that's 128,620. Yeah. Tam-tadam.
Hello, sir. What do we have in the the bracket in front of the inventory? Yet to be what?
Found.
Yet to be found.
Yes.
Okay.
We haven't found inventory for the balance sheet. So here lies the case. We have prepared the P&L, have we not? Don't we have the
Yes, sir.
budgeted income statement? We do. This is the budgeted income statement. We have the cash budget. Now we need the budgeted balance sheet. So, Jocal Limited statement of financial position as at 31st January 20x2, right? So let's get our assets. So under assets, I think we have what? Receivables, right? Receivables, we know that it will be 70,000 brought forward. Inventory, we already have inventory, right? Closing inventory. We know it's 35% of what? The 34,800. You guys remember? Closing inventory.
12,180.
35 of 34,800. That's 12,180. Okay. Now, what do we need? We need cash and what? Cash equivalents. And this one, you get it from the cash budget. You see the trick? So the cash budget itself is to get the cash figure, the missing cash figure on the balance sheet. And what was it? 128,620. Wow. Okay. So there were no non-current assets for Jocal. So this becomes our total what? Assets, nothing. Boom, boom. Okay. So when we add, what do we get? 70,000 plus 112, 180 plus 128,620. That gives us 210,800. All right. So now we need equity and liabilities. So let's come to equity. So share capital. We don't know what share capital is. Probably is the balancing figure. Retained earnings. They didn't give us any opening retained earnings, so it is assumed that the profit for the year will go to retained earnings, right? Because we know that every time you make a profit, it is transferred to income surplus. So 0 plus the profit for the year. How much profit did we make for the year from our P&L? 25,000, right? True or false? True or false? So we add the 25,000. So this gives us 25,000. Okay. Then we come to liabilities. So liabilities, we had payables being 60,000. Then we have loan interest accrued. Loan interest being 20,000. Then we have tax payable being 2,000. Then we had expenses accrued. Expenses accrued being 6,000. When we add all the liabilities, we end up with 88,000. So all should add up to our equity and liabilities, amounting to 25,000, 210,800, right? Because total asset equals equity and liabilities, 210,800. So 210,800 against 210,800. Now, this is the balancing figure, the missing figure, the share capital, right? So this plus this minus the 210,800, I'll get it. 210,800 minus 25,000 minus 88,000 to give me my missing figure, which is share capital of 97,800. So total asset equals equity and liabilities, a complete master budget question. Maybe I doing why?
And also,
Oh, this question is not it's not plenty. It's from my head, that's why.
but is it possible we can guess something like this?
You don't have a problem. I got you now. There's no question.
No, I mean, I'm looking at the time.
That's why,
time you
don't
take
worry. Budget questions are there to waste your time. After that, I'll give you exam strategy, right? In the management accounting exam, okay, you have 65 marks of focus from my point of view, right? That as a student, you have to focus on. Do you know why? Look, mostly performance carries the huge marks, okay? Performance is 20 marks. Focus. Anytime I write focus, it means that it should be your first or second area. Then you come to management decision making or standard costing and variance analysis, right? So standard costing and variances come for 15 marks. Another focus area, right? Then we have capital budgeting. So comes for 15 marks. If we put all these marks together, how much?
50.
Then we have costing, right? Costing and the models of evaluation. Okay, also coming for 15. How many marks?
65.
Now, this 65 marks is where you should put all your work. Now, the other 35, which is budgeting, right? And then short-term decision-making, relevant costing, right? Budgeting is 15, this is 20. These are time wasters. Do you know why they are time wasters? Budgeting, the questions are awfully very long and confusing. Short-term decision-making involves a lot of thinking. So you can spend more than 2 hours on just this 35 marks, while you can make 65 here. You see the trick? People fail management accounting because they end up focusing too much here, and then they leave where they can get more marks, where the theories are focused on. Does that make sense? So as a student of mine, this area put there me, though I teach you, but I say don't put your focus there. If it comes as theory, maybe what is budgetary control, importance of budgeting, those kind of things, advantages of zero-based budget, you know, those ones, they are theories, fine. But if it comes calculation, don't bother. Finish all these areas before you come there. Because budgeting is a time-wasting scheme. What did I say? Budgeting is what?
A time wasted area.
Yes. So you don't go and start budgeting. No, you have 65 marks of focus. Do you get my strategy? And this strategy has worked wonders for my students over the years, except those who do not listen to me. And most of them do not listen. Take your time, you'll be fine. Yeah? All right. Any further questions? Have you written the strategy down? This is your strategy to pass management accounting first attempt. Put it down. Then let's start solving questions from the past question.
Sir,
Yes, boss.
sir, please, so with the one he said we should focus on, you made mention of capital budgeting.
That's investment.
How different is that one from the budgeting in
That's investment appraisal.
the first one?
That is investment appraisal.
Okay, that's the first.
Capital budgeting is the same as investment.
Okay, sir. Okay, sir. Send in the standard costing.
Budget variance analysis.
Okay. All right, sir. Thank you.
Have you written the strategy down? Can we solve some questions and then we can call it a day? So we'll solve a simple cash budget and we'll solve one master budget. Then I know that the rest you guys should practice, then you become perfect, right? Budgeting, master the theories, right? Management accounting students don't like theory, but the theory is what now they are focusing on. I beg you. Makes sense. All right. If you can do that for me, you wouldn't have a problem. So we are back in the game. What do you say? Shall we proceed?
Yes, sir.
All right.
Sir, please, are we getting the recorded version?
All my classes are always recorded and shared.
But the last time, I don't know, I didn't see it.
Yes, the other one, YouTube has held the video. There was somebody using somebody's picture. What was it? I don't know. The person's picture was showing on the screen, so they said it's a copyrighted material. So they've withheld the video. I have to edit it again and cut those things off.
Oh, okay.
They are very strict with that thing. I don't know whose profile. He didn't use his own picture. He used some, I don't know, some celebrity's picture. So it showed on the video screen. And then they said I've used copyrighted material. So they withheld the video.
Oh, okay.
That is why. Anyway, we'll get through it. Okay, so we have Roxy Limited. You've posted it on the page already, right? Cash balance expected to be 30,000 at the start. We have sales, which started from November. We have purchases and all that. So when it comes to cash budget, I said pick easy max specs. What did I say? Pick what?
The easy max
Easy
first.
max.
Okay, so we say Roxy what? Limited, right? Then we go and pick easy max. So we say cash budget, right? For the 3 months, right? Be writing along, go. For the 3 months ended, right? So for the 3 months ended. So in that case, what are the name of the months? We're only doing January, February, March, right? So I put down January, put down February, put down March, and put there what total. Right? So, you know that usually sales and purchases waste your time. You guys remember? You guys remember, right?
Yes, sir.
Sales and purchases mostly waste your time. So you go and find the other ones that are easier. You get it? And put it there. So payment, I'll just come there and pick easy marks. Then I'll go and do other questions. So payment, I realize that when you read, it said all purchases are on credit and past experience shows that 90% settled in the month of purchase and the balance settled the month after. Wages are 15,000 per month and overheads are 20,000 per month and all are settled monthly, right? So you see, it's easy. So maybe I can say purchases, which are payments to suppliers. I'll put the workings. Then wages, right? Wages, straightforward. They said it's what, 15,000 per month, right? I just go 15,000, 15,000, 15,000, right? Giving me 45,000 for total. You see how easy this one was? Do you all follow? Overhead is what, 20,000
Yes,
per
sir.
month. But they said it has depreciation. Is depreciation a cash flow?
No, sir.
So in that case, overhead
Yes, sir.
take the 20 and take out the depreciation of 5, right? Then you settle what? That one to become 15,000 per month, 15,000 per month, and 15,000 per month, not so. Giving us what? 45,000 as well, not so. Okay. Then they said taxation of 8,000 has to be settled what? In what month? Taxation has to be settled in what month?
February.
February, right? So in that case, taxation January, February, We settle taxation of what? 8,000 payment. Now, so then they said we'll receive a settlement of insurance claim of 25,000 in March. So we have what? Receipt from customers. The receipt from customers, right? And somewhere down here, I say what? Insurance what? Claim. When will they be received? 25,000 in March, right? 25.
Yes, in March.
25,000, right? Okay. So nil. You see how I do it? So assuming this was exam, I've put in this marks, I'm gone. I go and do all other things. Do you see? And then if I can come back, fine. If I don't come back, at least some 6 marks be out of 15 and bomb. Do you get it? But budgeting itself is a waste of time in the exam. So you just need to be smart, right? Play smart as we've done. I hope that makes sense. So can we go and work on our workings? You see how easy this was? Or is it because I'm the one solving it? That's why it looks easier. But I hope it was easy. You just pick the easy marks.
We are learning the tricks.
Okay. I hope you're actually learning the tricks. You are not just watching me do it. Okay.
No, we are,
Okay.
we
So
are practicing.
when the months are given, okay, now we know that we're only finding for January, February, March, right? But because it started from November, that means there's a reason why they started from November. Do you see the trick? So this is what I do. I will bring all the months. Okay, then I'll draw lines in between. So let's say November, December, January, February, March, right? Okay, so this is it. So November, we know that the sales, they've given us November sales as what? 80,000 also. Then we have 90,000, December, January 75,000, February 75,000, March 80,000, right? Okay, so once we have this, now let's go into the settlement. What does it say? So analysis of the record shows that debtors were settled according to the following: 60% within the month of sales. So once they tell me 60% within the month of sales, it means it's cash sales. Not so. So straightforward. I'll come to the receipt from customers and say cash sales, which is 60% within the month of sales. So I'll just find 60% of each month's sale, then I put it there. Makes sense to everyone?
No, that would be 40%. No.
No, they say 60% within the month of sales. That means
Oh,
that's
okay.
cash sales. January, you pay within January. Is it not cash sales?
Okay.
So I
Yeah.
just come and put it where it is. So cash sales. So I find 60% of January. That's 0.6 times what? 75,000. That'll give me what?
Okay.
45,000. February to be the same 45,000, right? Then March will be 60% of the 80,000. And that is what? 48,000 also. Okay. So 45,000 plus 45,000 plus 48,000. And that gives me what? 138,000. That's it. So now I need the credit receipts.
Please, sir, can you come again on that kindly, please?
You are selling. They told you that those who bought today will pay 60% today. Is that not cash sales? Eh? Those who bought today, if they pay you today, is it not cash sales? That means
It's cash.
they paid in
It's
cash.
cash sales.
That is it. So if they are telling you that the sales, the payments, the one that you sold in January will be paid in January. Is it not cash sales? So it is. But the rest are not paid in the same January. So it's credit sales. You give them credit. So 60% within the month of sales. I've found 60% of the sales and I've recorded it. That's all. Makes sense now. So it's now credit sales receipts that we have to go and find. So let's go there. So it says what? 60% within the month of sales, 25 in the month following, and 15 the month following. So in that case, if I come to November sales, right? So November sales, it will be collected what? 60 2515, right? But the 60 has already been recorded. So the 60 in November will be nil because you have already dealt with it. 25% will be paid in December, right? So 25%. That's
48,000.
20,000, right? So I mostly draw a line here because we only need January, February, March. That'll be 20,000, right? Then the 15% will go into January. Do you guys know that? 2.15 times the 80,000. So
That's
12,000
12,000.
will go to January. Make sense? Okay. So we need December sales, right? So December sales will be settled what? The same 60, 25, 15, right? So 60 will be settled in December, but we have already captured the 60 side. 25% in January. So 0.25 times the 90,000. Now
22,500.
that's 22,500 will come to January, right? Then 15% will go to February, right? 0.15 times the 90,000. That's 13 what? 13,500, right? Okay. So we come to January sales. It will be settled 60, 25, 25, right? 25, 15. Now, the 60 that should be in January, we've dealt with it as cash sales, right? The 25 will be in February. 2.25 times 75. That's 18,750, right? And then the rest will be dealt with in what? March. So 0.15 times the same what? 75,000 will be dealt with in March. It's 11,250. Come to February sales. We deal with it 60, 25, 15, right? With what? 60 being in February, we know that, right? And 25 being in March. That's
18,750.
18,750, right? All right. Then when we come to March, you know 60 will be in March, 25 in April, 15 in May. But we've already dealt with the 60%. So this is all that we record. 34,500. 32,250. 30,000. So we capture. Any question? Was it very easy? Are we on point? Can we
Yes, sir.
in the purchases?
Yes, sir.
Let's go. Purchases. So purchases too, we lay it out. You see my strategy. If you lay it out, it makes it easier. Have you noticed? So purchases too, I'll start with what? December, January, February, and March. Also. So my purchases was what? December was 60,000. January was what? 55,000. February was what? 45,000. And then March was 55,000. Massive. Right. All purchases are on credit, and past experience shows that 90% are settled in the month of purchase, right? Which means that is cash. And the balance settled the month after. Anyway, anyhow you do it, you should still get it. So in that case, collection or payment schedule. So in that case, December settlement will be what? You know, we settle what? 90-10. True or false? So that means 90%
True.
of December will be settled in December, right?
54,000.
54,000. And 10% will be settled in January. And that will be what?
6,000.
6,000, yes.
So we go to January, which will be settled 90-10 again, right? So we know 90% of the 55 will be settled in January.
49,500.
5,500 will be settled in February, right? Okay. Come to February, 90-10, right?
40,500. 90%.
Then the 4-5 will be settled in March. When we come to March, is that correct?
Yes, sir.
Right. So now you close it off. I hope this style is not difficult. It's straightforward. There's another approach which makes it very long, but I don't like that one. I like this one, right? So that you get your marks and then you are gone. Makes it easier. So we have 55,500. 5,500 plus 4,500. We end up with 46,000. Then we have 4,500 plus 49,500. That be 54,000. Okay. In that case, you go and fill in 55,500. 5,500.
46,000.
Is it 54,000? Yeah. Okay, so the total, we have 55,500 plus 46,000 plus 54,000.
155,500.
And okay, so we close this off. We get our total receipts. Total receipts, let me use a red color. So we have 45,000 plus 34,500, 79,500 for this guy. 45,000 plus 32,250. We have 77,250. We have 48,000 plus 30,000 plus the insurance of 25,000. We have 103,000. We have 138,000 plus 96,750 plus 25,000. That's 259,750. Okay. So now that's our total receipts. Let's call it A. All right. So we go to total payments.
$85,500.
Then the first one is how much?
$85,500.
85,500.
Yes, sir.
Okay. Then the next one, 46,000 plus 15,000 plus 15,000 plus 8,000, 84,000. 54,000.
84,000.
84,000 500 plus 45,000 plus 45,000 plus 8,000. That's
253,500.
253,500. Okay. So now that we have total payments, we can call it what B, right? So we need the net cash flow or the net cash receipts or cash payment, right? So net cash receipt is just A minus B, right? Okay, so let's go. A was what? 79,500 against 85,500. We have a loss, right? And net payments. 79,500 minus 85. We end up with negative 6,000, right? No, so we have 77,250 minus 84,000. We end up with 6,750. 103,000 minus 84,000. Positive cash flow of 19,000. Then we have 259,750 minus 253,500. We have 6,250 positive, right? Okay, now that we have this, we need to add our good friend what? We need to add our good friend, our opening cash and cash equivalent, right? Opening cash and cash equivalent. And what's the opening balance? So that's our what? Cash balance on 1st January is expected to be what? 30,000. So remember, anything that affects only one side must affect the total column. Make sense? Make sense? Make sense?
Yes, sir.
All right. So in that case, we close it. Remember, opening cash for this month becomes closing cash for this month becomes opening cash for the next month. Make sense? True or false? True. So in that case, closing cash and cash equivalent will become what? So 6,000 plus 30,000 minus 6,000.
4,000.
24.
Okay, so this 24 is closing for this month, becomes opening for the next month, right? So that means opening will become 24,000 here, right? Okay. So we add it up, 24,000 minus 6,750. We end up with 17,250,
250.
which becomes opening for this month, right? So we have what? 17 what? 250. Let's add it up.
36, 250.
19,000 plus 17,250. We end up with what?
36, 250.
36,250, right? So we end up with 36,250. Okay. Now you see this figure, it should always equal this figure at the total. Then it means your cash budget has balanced. So let's add the total column and see if it also gives us 36,250.
It does.
Okay. I balance you. I balance you. All right.
But say when you add the figures in green are the opening cash and cash equivalent.
You are not supposed to. That one is opening, so you don't add them because
Okay.
this one comes in. That one it shouldn't add up because it's only the 30,000 that should show here. Remember, it's opening. Everything here plus the opening, not the sum of this. Are we
Okay, I get the drift.
All right. So that's how we prepare cash budget. All right. Any questions so far? I've given you different ways of preparing the cash budget. Are you comfortable now? Now, practice.
Yeah, I think it's good.
All right. So,
So can you scroll up?
but the workings, you guys are okay. Means the workings will not this thing there. You can always do it. Workings didn't hear me. Like how to do this thing. The shadow.
Yes, sir.
The shadow.
We get it
So
now.
give it this one. How to get it when payments are made 60%, 25, 15, bad debt, discount. I think we took all those different types, right? Not so. And how to use control accounts as well. Is everybody okay?
But
Can we solve one master budget, a big one?
sir, can you please scroll up? I want to check something. Sales workings.
The workings or the cash budget itself?
For the sales. No, for the sales workings.
Mhm.
Thank you.
There's a nice cash budget here. Maybe this question, take a shot and try it on your phone. Divine Traders Limited.
So I thought you said we will get it.
We'll get what?
The solution and the question. As a recorded version.
This one, there's no, you will get whatever we've done today. I mean, the question in the book itself, there's no solution.
Oh, okay.
That one is for you. The ones I don't bring solution, it means you have to solve it on your own. So take a shot. Try it. Like the functional budgets are put on your page. So take a shot of this question, put it on your page and try. So the bank balance standing in the books of divine traders was 11.5 in deficit. The department provides you with the following information. Relevant notes to the data. Wages and salaries should be paid 3 days after the end of each month. Wow. General expenses are paid for 1 month in arrears. Office equipment acquired in January will be paid 3 months following the purchase, and the one to be acquired in June will be paid for immediately. Write this question. Office equipment depreciated at 2.5% per month. Staff are granted advances. The advances will be recovered in 4 equal installments beginning from the month following the month in which the advance was granted. Hey, question may come about. But it's for you. Are you taking the shot?
Sir, with the note, the wages and salaries will be paid 3 days after the end of each month.
It's
It
simply
means that-
telling you it's in arrears.
Okay.
That means January wages will be paid in February. That's all.
Okay.
It's another way of telling you it's in arrears. Try your hands. Please, have you taken the shot of the first part, which is this? Then I scroll to the next part. Can we go? Can we go? Who is taking the shot? Can we go?
Yes, sir.
Nobody was saying anything. So this is the next part of the question. Take the shot. Then we come and solve one master budget. Are you there?
Yes, sir.
So let's go to November 2015, question 3, management accounting. November 2015, question 3, management accounting. Pam-padam. Pam-padam. Oh, question 2. Let's do question 2. Brofre Limited. Pam-padam. Can you see my screen? Now, this is a question worthwhile. All right. Brofre Limited retails fertilizer to farmers in Ghana. The company has approached its bankers to provide funding for next year's operations, and 3 months master budget has been requested for review by the bankers. You have been approached by the management as a consultant to prepare the first quarter budget for the bankers' consideration for its next year's operations. So they've given the end of December 14 budget, right? The information, the debtors, bank balance, whatever. And they've given us additional information. Now, what's the requirement? Budgeted income statement for the 3 months, budgeted statement of financial position, then the cash budget for the 3 months. I like it. Now, let's go through the notes first. Now, anytime you start going through notes and you are required to prepare cash budget and you don't see settlement, like 60% in the month of purchase, 40% in the month following, right? It means that they want you to use the cash, the control account approach. Do you guys notice that we don't see any settlement, like 10% in the month of the purchase, 4%, those things? That means they want you to use the cash what? The cash flow approach or the control account approach. Do you guys remember that approach? Opening balance, add P&L compared to closing. The difference is the cash received or paid. Makes sense. So now you open one page for each of the statements. So the first one will be what? Say Brofre what? Brofre Limited. Budgeted income statement, right? That's the first page. Then I go to my next page. I say what? Brofre Limited. Budgeted balance sheet or budgeted statement of financial position. Right. Then the next one will be what? My budgeted cash or my cash budget, right? Brofre Limited. Nowadays, because of time, they don't usually bring this type of cash budget. They can bring it and make it 15 marks though. But now they bring simple one. Hey. Hey. And the next one will be my what? My workings.
It's not easy.
Question, are the questions are difficult, eh? Are the questions difficult? All right. So as you've laid down everything, the next thing you are going to do is just capture everything you need to capture. So January, February, March, right? So balance sheet, come to January, February, March. Cash budget, the same way you do January, February, and March. When it comes to your workings, right? So you look at the workings you can do and which one you can do quickly. So now we read it. It says depreciation is provided at 5% of non-current assets. If you feel you don't understand these notes, don't worry, move to the next one, right? Straightforward, this one is easier. Did we have non-current assets? Yes, we did. So I'll just go to working number 1 and say what? Non-current what? Assets, right? So they said depreciation is giving us what? What percentage of non-current assets?
5%.
5.
And so where is non-current assets? You go up, then you see fixed asset at cost, right? 698,000. So this one is just publish accounts. So you do what? 5% of 698,000. And that gives us what?
So 34,900.
34,900.
So that's 34,900 per month, right? So we've gotten our depreciation. Okay. So now that I've gotten my depreciation, I can go and work on the face of the balance sheet and get the accumulated depreciation, right? And put it there. So where's my budgeted balance sheet? Okay, so I can say what? Non-current asset, right? So non-current assets. So you know non-current asset, I can start with the cost, right? So cost for each month. I'll just bring the costs. Accumulated depreciation and what? Net book value, right? So the cost was what? 698,000. The cost always remains the same unless revalued or changed, right? 698,000. True or false? Then now I'll take accumulated what? Less accumulated depreciation. So did we have any accumulated depreciation from the previous month? Did we?
I don't think so.
There is.
Well, there is provision.
98,000.
Provision for depreciation is accumulated depreciation, right? So in that, Last month, the depreciation was what? 98, right?
98,000, yes.
98,000 plus this month's charge, which is what? 34,900, not so, for the first month. So 98,000 plus what? 34,900. That gives us what? 132,900, not so, accumulated depreciation. The next month again, we'll add another 34,900, not so, accumulated, giving us 167,800. The next month again, we'll add another 34,900, giving us what? 2,700, right?
Yeah.
All right. So they said, well, closing inventory is expected to increase by 2,000 in January from December levels. This is expected to increase by the same figure in February from the projected figure in January. It is expected that in March, closing inventory is desired to be 26,000. Okay. So let's go back to our workings. We've done non-current assets to inventory, right? So let's see what happened. Can do opening inventory, closing inventory. So they are saying that what? Closing inventory is expected to increase by 2,000. So if I take December closing inventory, right? December closing inventory was what? 20,000, right?
20,000.
But they said each year it should increase by what?
2,000.
2,000. So that one will become 20,000 for opening inventory for January, right? But plus what? 2,000. So this will now become what? 22,000. So if I come to February, this one now becomes 22,000 also. Will increase by what? 2,000 again. To become 24,000. Make sense to everyone? You see, always they are messing with you
Yeah.
around inventory. Then we come to March. Opening will become now 12,000, right? Add 2,000 again. Become 26,000. So you see the December one became this. This became this. This became this, right? Makes sense. So now we have opening and closing stock for each of the months. Makes sense. Straightforward. Okay. The company makes a profit on 25% of its sales. You see the first question with the gross profit, right? So they've given us the gross profit. We can easily find the gross profit, right? 25% on sales. Okay. So operating expenses is also expected to increase by 10% from that of December. And this is supposed to increase at the same growth rate to match. So operating expenses, they said to increase by what?
10%.
10%.
So anytime you see increase, it's the cash flow times 1 plus R, right? Do you get it? If
Yes,
you
sir.
see decrease, it's the cash flow times 1 minus R. Always have this in mind so that you don't stress. So once it's increasing by 10%, it's multiplied by 1.1, okay? So in that case, that means January operating expenses will be that from December, right? The December operating expenses of 60,000 multiplied by what? 1.1. Makes sense? Makes sense?
Mhm.
Yes, sir.
That's 66,000. Then February will be to take the 66,000 and multiply by what? 1.1 again, right? That gives us what? 72,600. Also, come to March, take this 72,600, now multiply by 1.1 again.
79,860.
Okay. Operating expenses done. Sales is expected to grow by 15% from December until March. So sales, right? So sales is expected to grow by 15% until March. So in that case, sales for December, I get it. You can say sales is growing by 15%. So that means you have to take the cash flow, which is sales, and multiply by what? 1.15. You guys remember? because it's growing by 15%. So 1 plus the growth rate. If we take our 400,000 sales and multiply by what? 1.15, that gives us January. And that gives us how much? Oh, by now everybody's following. 100,000 by 1.15.
460.
160,000 for that month. February, we take the same 460,000 and multiply by 1.15.
529,000.
529,000. The March.
So they say from December, but it started from January.
No, from December. So December 400. Nenini. From December, we are doing for only January, February, and March. So December value is what is growing to become January. January is going to become February, and February will grow to become March. Please listen to the bro.
Okay.
Is that okay? Is it not December figure that we use? Then where did we get the 400 from? From December levels. I beg you. Makes sense.
Yes, sir. Yes.
Right. Is it clear to everyone now? So we've gotten our sales for each of the months. Okay. So now that we've gotten our sales, do you know it's easier for us to get our gross profit and cost of sales? You remember that they told us gross profit is 25% of sales. Do you remember?
Yes,
So
sir.
we can easily find it, then we can use it to find our cost of sales. Then we get our missing figure, which is purchases. You see, always purchases is mostly missing, so that you go and use it to get your cost of sales and get purchases and use it to get your control account, just like what we did before. It's the same thing. So 25% on our 460,000, that gives us 115,000 for gross.
15,000.
529,000 by 0.25. That's 132,250. 0.25 by 608,350. That is 152,088. All right. So now that we have this, at least we can go and fill in the details, right? But I want us to finish all the works that we can. We've dealt with sales. The debtors figure is desired to be proportional to the sales value. So if they say something is proportional to sales value, it means that it is growing just like sales, okay? So something that is growing just like sales, if sales is growing by 15%, right? If sales is growing by 15% and they say something is growing proportional to sales, it means that thing is also going to be what? If sales is growing by 15% and they say something is growing in proportion to sales, it means that thing is also going to be what percentage?
15%.
15%.
15%. But what if the percentage in sales was not given? How do you do it? You can find the growth in sales, right? And use it to multiply that thing. So how do you get the growth in sales? We all know that arithmetic growth is calculated as what? New minus old, all over old, times 100, right? So I can just take any month sales. For instance, I can take what? 529,000, not so, and less what? My 460,000, not so, and divide by what? The same 460,000. If you do this, you end up getting back what? The 15%. Then you use this to now multiply whatever figure they say used to multiply. Management accounting is all about missing figures, right? So if we didn't know sales was growing in by 15%, you can find a growth between any of the two that you have, and you can still get the growth. Once you get the growth, you can use it to multiply whatever they've given to you. So now what do I need? I need my debtors figure, right? So in that case, they said it's growing in line with sales, right? So debtors too will grow by how much? Grow by what percentage? 15%, right? Just like sales.
50%.
So now we already know debtors from December. So let's grow it. So debtors, January will become the December debtors grown by 15%. And December debtors was how much? Let's check. 23,000, right? Will grow by sales, 1.15. So January debtors will be what? 23,000 by 1.15. And that is 26,450. Then we come to February. We take January debtors, 26,450 multiplied by 1.15. 26,450 by 1.15.
That's 30418.
30418. Okay. Then we come to March. March debtors, right? Which is what? The 3418 multiplied by 1.15. That gives us 3418 by 1.
34
That's 34,981.
34981.
All right. So now I think that was the last one.
There's somebody sounding.
It's not easy. It's not easy.
Hey, in this economy, you are pony. Hey,
I mean,
I shock say.
Fruit for management accounting. So they gave us creditors, right? Creditors, they gave it to us straightforward. Do you guys get it? So far as you have debtors and creditors, what should come to your mind? Debtors and creditors, or receivable and payable. We used it to do something.
For
purchases and
purchases and the payment, sales.
I want another name for it, not purchases and sales. We use it to get something. We use it to get what? Cash receipts and payments to suppliers. That's the word I want to hear.
Yes.
okay.
Using what approach?
The control account.
Okay.
Oh,
You see the trick. So when you see these things, always that should start sounding in your mind. So I've just laid down the trap to catch the bailer. Do you get it? Okay. All right. So now we go and fill in the details. So P&L, we just come, we pick our sales. Already we have sales, don't we? So you see, when you do the workings, you just go and you pick sales. What were the sales? We come here. We pick 46529, right? So 460,000, 529,000, not so. Then what else? 608,350, not so. 608,350. Okay. Then we come and less our cost of what? Sales, not so. So cost of sales, if you like, you can go and work it separately or put it on the face of the account. It doesn't really matter. But we know gross profit is what? 25%, not so, of sales. So if gross profit is 25, it means cost of sales is 75% of sales.
Yes, sir.
Always understand that thing in management accounting and you'll be safe. If they tell you contribution to sales ratio, look, contribution to sales ratio is 40%. It means variable cost to sales ratio is what percentage?
60.
60.
Always have this in mind so that you don't have to stress. If one side is this, if a company pays out dividend of 40%, it means how much do they retain? 60. You get it? Always know the other side so that you are, if I pay 10,000, if I have total of 20,000, I pay, how much do I retain? It means I retain the other side. So if you have this, you will always be safe. Instead of going and doing a long calculation, you can just find the other side, right? So in that case, we have already computed, but let's just compute again. 460,000. Okay. This one gives us 115 for 1,000, right? Not so. 115,000 as my cost of sales. Then this one, 0.25 times the 5.
132.
50, right? 132,250. Then you have 25,000 of the 608,350. That gives us 152,088, right? Okay. So now we get our gross profit. So 460,000. Yes.
Sir, you are making a mistake. Oh.
And say it's 345.
It should rather be
75.
0.75, not 0.25.
That one is the
So you can put the figures at the gross profit.
It's supposed to be at the gross profit level. Sorry. Yembre. So 0.25 times 460.
Say an exam, say, hey, you know what, Diego.
No, Diego, but it shall be no more. Amen. Amen. It won't
Amen.
Amen.
So 529. Yeah, a mistake in 2 Kai. Because dear examiner, all my cancellations are cancelled. This one gives us 152,088, right? So the balancing figure is the cost of sales, right? So 460,000 minus 1,500.
345.
345,000.
And this one,
396,750.
750.
and this one,
456
263.
263.
okay. So now what do we need? We need operating expenses, right? Operating expenses, you've already worked for it. So we just go and pick. What is operating expenses? Up. 66,726, right? So we have 66,000. We have 72,600.
79,860.
79,860. Then we have what? Depreciation. Do you guys remember? Depreciation is an expense for each month. 34,900. 34,900. And 34 what? 900. All right. So was there any other expense? No, they didn't think so. So we have our net profit for the period. Net profit. Boom. So let's subtract and see. Please give me the figures.
14,100 for January.
14,100. 132,250 minus 72,600 minus 34,900.
The match is 37,328.
37,328. And February.
February 24,750.
Okay. Now remember that any profit we make for the year, where does it go to? It must go to retained earnings, right? Or income surplus account. True or false? Because that's accumulated. Okay.
Accumulated.
So in that case, the same way we have J, we have F and M, right? So what's the opening balance for our retained earnings? Opening balance. The question should have given us opening.
120,000.
They told us it was 120,000, right? Okay. Then we made profit of how much for the year? Add profit for the year. Or for the month.
14,100.
We made profit of 14,100. And there were no dividends whatsoever. So it means that the closing retained earnings will be what? For the particular month.
134,100.
134,100. Now this 134,100 becomes opening for the next month, right? That's 134,100. Now we add profit for that period. That is 24,750. And what do we get? 134,100 plus 20.
158,850.
So we get 158,850. Okay. Then we bring that same 158,850 here. Then we add our profit of 37,328, right? As stated. So what do we get? Do we get 196,178? Is it correct? Is it correct? Is it correct?
Yes, sir.
All right.
It's correct.
Okay, so now we come to the balance sheet. We've already done what? Non-current assets. So we have cost accumulated depreciation. We get carrying amount, right? Or net book value, whichever way you call it is still accepted. So let's get our net book value for non-current assets. So we have 698,000 minus 132,900 accumulated depreciation. That is 565,100. 698,000 minus
530,200. The next one.
530, 200.
200.
698.
495,300.
495, 300, right? Okay. So after this, we now need current what? We need current asset, right? Current assets, inventory. I believe we did some workings for inventory, right? You just go and pick up
Yeah.
inventory. We only need closing 22, 24, 26, right?
Isn't it?
Let's go. We pick
One.
22,000,
Come again.
24,000,
Come again.
20,000, right?
Why? I'm at home. I'm in class.
One.
So we need receivables. Receivables was going in line with sales. We also did working for it, right? Do you guys remember? So we just go and pick 26,450. 26,450. Also, come 34,180.
3418.
34,981, right? 34,981. So now we need what? Cash and cash equivalent, right? Which can be found by working the cash budget. The cash budget is always the balance for the cash. You get it? We have to go and work for it. Okay. So when we put all this together, we come and get the total assets. And we don't know what it is now. So we come to equity and liabilities. So equity and liabilities, we come to equity. We'll have our stated capital. Mostly they don't give it to you, you have to work it. Just like the other question you saw, it was the balancing figure. Do you remember? Then retained earnings. Did we have retained earnings? Yes, we work for it. 134,100.
158,850.
158,850.
196,178.
196.
178.
Okay. So this one gives us our equity. Then we come to liabilities, right? The only liability we had was what? Creditors, right? The creditors, the balance was given to us straight, 50, 46, and 52. Also, so 50,000, 46,000, and 52,000, right? That gives us our total equity and liabilities. So now that we know that we need cash and cash equivalent, we come to the cash budget. Where's our cash budget? You know that cash budget, we need cash receipts, right? And cash receipt is definitely what? Receipt from customers, right? Receipt from customers. We have to go and work for it. Then we come to payment. What payments did we make? We made payments for what? Payment to suppliers, right? Payment to suppliers, and we paid for expenses, right? Payment for expenses. With that one, it was straightforward. So we can just go and pick our expenses because there was no expense credited. So the expense was what? 66, 72,6. We say what? Expenses, we are paying what? 56,000. No, it was 66 rather. 66,000, 72,600. And then we have 79,860.
79.
79,860. Okay. So now we need these two, receipt from customers and payment to suppliers. And we can use control accounts to work it, right? So anyhow you want to do it. So you can say cash receipt from customers, right? Anyhow you want to work it. You can do it horizontal, you can do it vertical. It's all up to you, right? So if you like, you can go this way, balance brought forward, not so. Add sales for the year, take out any payments or take out the balance carry forward. Then you come and get what? The cash receipt, right? We know this. It's the same thing that I've done. Opening balance, add sales, compared to closing, get the cash receipt, right? So let's take January. January was the opening balance for the debtors. You just fill it in, right? So this one I've adopted a different format. It's the same thing. What's the debtors figure? Let's go and pick 26.
26,450 for January.
Then we pick 26,450. Then we add sales. Sales for the period of how much? 460,000 also.
Yes, sir.
And debtors for the next month was what?
That is for the that was 3418.
No. We've made a mistake. Opening debtors is not 26. Opening debtors is from last.
Oh, 23. Yes, it was 23,000.
So that was 23,000 from December, right? Which becomes opening for January. We sold more to them, and at the end it was the equivalent to 26,450, right? So if you subtract, the difference gives us how much cash we actually received from customers from January. 23,000 plus 460,000 minus 26,450. That means we actually received 456,550.
550.
All right. So we go to February, we do the same. That means the January carry forward becomes the brought forward, right? So the January 26,450 becomes the brought forward. Then we add sales of 529,000, right? Because we made sales of 529,000. Then we come to closing debtors, which was 30,418, right? For that month, 30,418. And that gives us how much? That's 525,032 was actually received. Then we come to March. The March, we bring our opening, which is the 30,418. Then we sold more to them. How much sales did we make? Go and check. The sales was 608,350, right? So we sold 608,350 to them, right? We take out the closing balance, which is 34,981. 34,981. 34,180 plus 350. 34,981. That's 603,787. Okay, so now we've got our payments. So we see from customer 456. Is it 456,550? Yes. 550. Come to February 525,032. 525,032. Then 603,787. 603,787. Right? So now we are left with payment to suppliers, and that one we need to use what? The creditors figures. Question, will you see budgeting is a waste of time?
Hey.
So all this thing can take you more than 2 hours to finish. So you see what I've been saying. Focus on your 65 marks. You pick easy marks, you go. I hope my strategy makes sense.
Yes, sir.
And you know, we haven't even found the purchases figure. You know that?
Yes.
That means to do this, we need to get purchases. So let's go and work. We need to get our purchases. And our purchases, we need to use cost of sales. So we know purchases will be the same as taking our cost of sales and taking out what our opening stock and adding our closing stock. So if you come to January, you have to go and pick our cost of sales for January. You come here and pick our cost of sales. It was 345,000. Then opening stock for January was 20,000. And closing stock was what? 22,000. So that gives us our 36. Get 347,000 as your purchases for January. Then you are now going to use that purchases to get the January creditors. The creditors opening balance 48,000. Then you add the purchase 347,000. Take out the closing balance 50,000. Question maybe one more. For Papa, February opening balance becomes the 50,000 for last month. We need purchases for February. So go and pay cost of sales for February. 396,750 from the P&L. Then we take out our opening stock, which will now be 22,000. Then we add our closing stock, which is now 24,000. $398,750.
398,750.
And take out our closing creditors. 46,000 for that month. What's the road feature going to be? March. Cost of sale. 456,263. So we can now pick them. Question if you all right, so we pick our cash payment to suppliers 345,000. 345,000. Now 398,750. 398,750. And then we have 458,263. 458,263. Yes, boss.
The figures that you are picking. Yeah, 345.
Mhm.
If you can check it again.
The 345. You said the 345.
Is it the cash payment you are putting?
Yes, so
I mean, then you have to change the second and the third.
I went to pick the other one. It's 402750. 402750.
No,
And
no,
then
452263.
45226. So we just subtract it and we get our net cash flow, right? Straightforward. 1456550 minus 34,000 minus 66,000. That's 45,550. And this one 525032 minus 402750 minus 72,600. 39,682. 603,787 minus 452,263 minus 79,860 operating expenses minus 71,664. Then we add our opening cash balance, right? Opening cash and cash equivalents. And opening cash and cash equivalents, when you look here, is the bank balance, right? And when you check the question, the bank balance was worth 55,000.
55,000.
Close it off. That gives us our closing bank balance or our closing cash balance. So this one gives us 45,550 plus 55,000. 100,550. So 100,550 becomes the opening balance for the next month. 49,682 plus 100,550. That gives us 150,232. We bring our 150,232 here. So 150,232 plus 71,664. That's 221,896. Right. So now this figure you've got is the cash section of the balance sheet. So you are now going to put it on the balance sheet under cash. So you can't be here.
This question was too much.
And they give you first question. I see 100,550. 105.
So why? What have we done to them?
You need to pass 150,232.
This is where they've determined to make us win.
52.
They have really determined with this question.
36. Oh, but this question is better than one question B. The name is the company manufactures 3 products: Asem, Beba, and Debbie. This question. Yeah, Asem, Beba, Debbie. The name of the product is an ABC question. I swear. Engineer Jane. You will solve and you will not guess. You are lucky. Management accounting. Your questions are not difficult. They have made it more theoretical. So, everyone for 0. Don't make me figure it out. That's 714,050. 530,200 plus 24,000 plus 30,418 plus 150,232. 734,850. 495,300 plus 26,000 plus 34,981 plus 221,896. 778 177. So total asset is always equal to equity and liability. So we fill it in 714,050, 734,850, and then 778,177. That means if I work back and I get stated capital, it will be the same across board. So 714,050 minus 50,000 minus 134,100. Roughly, I get 530,000. And it will be the same throughout. Then you are done. Same thing. Question is long, eh? But nowadays, they don't bring this kind of master budgets again. This one was just to entice you, okay? Show you what's up. All right. So I hope today's session wasn't bad. But people, as management accounting.
Then can you just scroll to the last part of the financial position statement?
All right.
Yes. So just a minute.
You are taking a shot.
Yes, I wanted to. Yes.
Now, when they bring master budget and cash budget, they are very easy, very 10 marks, very simple. But you have to, think small. Now, that's how the questions come. They are not difficult, but very short, but you have to think small. You get it? Now, they don't bring balance sheet and P&L together as a full question. In a cash budget like this, it will be only P&L, only balance sheet. I get, especially they'll bring P&L, where you have to stress small. Think deep, then you answer.
So say, with the stated capital, you add the creditors and then the retained, and then you subtract from the total amount.
Yeah.
Is that it?
Yes, please.
Okay, thank you.
Even if you are a very smart student, sometimes I don't go and work the cash budget. You see the data that you've been giving here. When you add all the assets and liabilities and subtract, you should get the stated capital from just this data. I mean, the data given from the front end of the question. If I add debtors, 23 plus bank balance plus fixed asset minus depreciation, and also minus creditors, okay, plus the retained earnings, you end up with a balancing figure of 530. Then straightforward, this is stated capital. Straight from the start. So at the end of the day, when you add all, you get this, you equate it to total asset, then the balancing figure will be the cash. Then you put it there without working the cash budget. There are many ways to kill a cat.
So say in